Welcome everyone. In its 20th meeting on July 21st this year, the GST Council approved the simplified GST returns. Uh, they are quite different from what we have at the moment. And to run us through what these changes are and what the new return forms look like, we have with us today Samarpreet Singh. He's a partner in direct tax KPMG India. He will run us through what the changes are, what we can expect, and what should taxpayers across different turnover group and sizes look at when these new returns kick in. So, Mr. Singh, please take us through what these returns look like.
Yeah, thank you, Pran. Very good afternoon to all of you. The way we've scheduled this webinar is I'll go through a presentation in the next 15 minutes, and then we'll open the house for questions. And there's just one request which I make before any webinar or presentation, that please ask the easier questions to me and the tough ones to Pran. So kindly make a note of it. So what we intend to cover here is a few slides on present structure, what is changing under the new structure, a comparison, some salient features, key advantages, likely challenges which I foresee, and then the QA round begins. So in terms of the roadmap, the 27th GST Council meeting gave in principle approval to the new simplified return filing process. This took place on 4th May, followed by formal release and approval of the simplified return formats and the contours in the 28th GST Council meeting, which took place on 21st July. As to when these new returns are likely to get implemented, so what the government has said is that there will be 3 phases. I have a slide on this, but if you look at the 3 phases in which it will get implemented, the earliest date appears to be April 2019. So I don't foresee the new returns getting implemented any earlier than April 2019. In terms of the present structure, it was fairly complex to begin with. We had GSTR 1, 2, 2A, 3. Thankfully, the government was kind enough. They lended their ears. They agreed to the industry representation and tried to simplify the process by including only 2 returns to begin with. So right now what we have is a GSTR 1, which is outward supply return, and then a GSTR 3B. So these are the 2 returns. One, of course, needs to be filed on 10th, and the other one on 20th. And along with this, there's a reconciliation which needs to be done. I hope that most of you are aware that GSTR 2A, the mismatch return is available at the government website, and dealers are expected to look at the mismatch which is available at government website and do their reconciliations. So right now what every dealer is doing is filing 2 returns, which is GSTR 1 and 3B, and then looking at the reconciliation in form GSTR 2A. Now, how this would change under the new return scheme is that for dealers who have turnover exceeding 5 crores, so I'm beginning with the large dealers, there would be only 1 return. And this return would have 2 main tables. One is for the outward supply, which is on the left-hand side, and the other one is for the inward supply. Now, the good part about this return is that most of the fields in both the 2 key tables is auto-populated. So how this would function is that within the return, there would be annexures. Once you fill that annexure, and annexure primarily pertains to invoice-wise details, the fields in the returns get auto-populated. So looking at the outward supply details, it's no different from what we have today. Only difference is that it's slightly simpler. So we would have to fill the details of B2C supplies, which is business to consumer, then business to business, exports with or without payment of tax, supplies to SSA, deemed exports, import of services, and so on and so forth. Similarly, on the inward side, details like inward supplies not received during previous tax period, inward supplies received, inward supplies which attract reverse charge mechanism, import of services, ISD credit, which is your input service distributor credit, and then the reversal of input tax credit computation. So 2 main tables, one for the outward supply, the other one for the inward supply, and most of it is auto-populated from the annexures which have been filled by uploading the details of the invoices. Apart from these two tables, there would be other four tables. First one, of course, is on the TDS and TCS credit received. Now, the TDS, which is a tax deduction at source, GST TDS, and the TCS provision are not in full flow as of now, but as and when these provisions are implemented, whatever credit you can claim because of the TDS and TCS which have been deducted would need to be filled in this table. Another important aspect of this new return is that the interest and late fee liability gets auto-populated, which is a good thing. So, one is always worried about how the tax authority would compute the interest or late fees for late filing, etc. Some part of it has been auto-computed and it will be auto-populated in the return. The moment you enter the details of the invoices and you show that the details which you are submitting are late, the interest would be auto-computed. And then, of course, you need to compute the interest on account of ITC reversal and other things. Then there would be a table for payment of tax, table 3, which shows how much tax you paid, what is payable, what is the ITC you're claiming, and what is the net liability. And last but not the least would be the refund claimed. So these are the other four tables apart from the main two tables which I spoke about in the previous slide. Now, talking about small dealers having turnover less than 5 crores, well, they would have options to either file a quarterly return or go for a monthly return. So those who think that doing compliance each month is a tedious job, it leads to additional costs, they can opt for a quarterly return. However, the payment of tax would continue to be monthly for even those who are filing the quarterly return. Now, in case dealers who have turnover less than 5 crores wish to go on a monthly basis, they have the option to opt on a monthly basis, in which case there will be two simplified return formats. One is called Sahaj and the other one is called Sugam. Sahaj return is for dealers who are selling goods to end customers, which is B2C transactions. So dealers who have only B2C transactions would need to file this return called Sahaj. And for dealers who have both B2B supply, which is business to business, and business to consumer, they can file a simplified return called Sugam. So just to summarize, the option is available either to go for a quarterly return or to go for a monthly return. This option needs to be exercised at the beginning of the financial year. And also during the course of the year, you can change that option once before the start of any quarter. And therefore you can choose between the quarterly return or Sahaj or Sugam, whichever is applicable to you. Moving on to the next slide. So what are the key principles of this new GST return design? There has been a consultation document which has been issued, and it uses a term that there would be unidirectional flow of invoices from supplier, and the buyer would need to continuously see those uploaded invoices. So what it means is that each supplier is required to upload the details of the invoices and the debit notes or the credit notes which the supplier issues, and the buyer is not supposed to upload anything. He's only supposed to look at it and either reject it or accept it. Or as a third alternative, he can also keep that in abeyance, which is called keeping the invoice pending. So again, I'll repeat, it's only one-sided upload of invoice-wise details. Suppliers are required to upload the invoices and the debit and the credit notes. The buyer or the recipient is not supposed to upload anything. The recipient is supposed to either accept the invoice if it is correct, A, B, he has the option to reject it in case he feels there is an inadvertent error made by the supplier, or as a third alternative, the recipient can keep the invoice in abeyance, which is called pending invoice. The second key principle is that it will be a simple return vis-a-vis what we have today. So we're moving from 2 returns to 1. And if you look at the overall format, it's much simpler than what we have today. Third key principle is that today we as a recipient or as a buyer are required to reverse the input tax credit in case the supplier has not deposited tax on time. So as a recipient, I get penalized for the default of my supplier. So there's an automatic reversal of ITC. This would not be required under the new scheme of things. So it's a very, very positive step by the government. And of course, there would be one monthly return, as I mentioned a little while ago, and the date of filing is 20th of subsequent month. So the date of filing is staggered, depending upon your turnover. Your deadline could be 10th or 15th or 20th, but primarily for large dealers, it's 20th of the subsequent month. So in nutshell, how the government has explained this entire return scheme is, they've said that it is an upload, lock and pay mechanism. To simply put, the suppliers upload the invoices on a continuous basis. I think I inadvertently forgot to mention that uploading would be on a continuous and a real-time basis. So what this means is that supplier at their own peril can upload the invoices either on a fortnightly basis, weekly basis, or if the number of invoices are humongous and they have enough manpower, they can actually upload the invoices on a daily basis as well. So it's complete flexibility to upload as per your convenience. And for uploading, you need not be online all the time. You can be offline as well. There's an offline utility which is available, which can help you upload the invoices offline. Once the invoices are uploaded, the recipient is supposed to view the invoices. Again, the note says the invoices would be viewed on a near to real-time basis. So they've shied away from using the word real-time, but they've said near to real-time basis. So it means that perhaps when the supplier uploads the invoices after say 1 hour or 2 hours, the invoices may be visible to the recipient, which is near to real-time. So upload by the suppliers, lock by the recipient. Lock means that the recipient is supposed to view it and accept it. Once he accepts it, it is called as a locked invoice. And finally, when the invoice gets logged, everything is freezed. There's a payment of tax which needs to be done by the supplier. So you can see a handshake on the right-hand side of the screen because, again, this is the term which they've used in the note also, which says that there would be actually a handshake between the supplier and the buyer. Supplier uploads the invoices and the buyer locks them. And thus, there's a handshake between both of them. So this slide, in a way, summarizes the new scheme of return. I spoke about the transition part. So what the government has said is that for the first 6 months, the current return, which is GSTR1 and GSTR3B, they would continue. Now, what is not clear is when did the timeline of first 6 months start? So whether they meant from July till say November, December. This is my interaction with the government officials. I understand that they were likely to continue, as I mentioned earlier, this process till March 31st, 2019. So this is stage 1. Under stage 2, what they will do is that, see, the entire return scheme says that the recipient would be able to get the credit of the invoices which the supplier has uploaded up to 10th of subsequent month. So let's assume we are in the month of January. So whatever invoices, and I'm the buyer, my suppliers have uploaded by 10th of February, I should be able to get a credit of that in the month of February. But for the transition period of first 6 months, which is under stage 2, government has said the recipient would not only be able to claim the credit of the invoices uploaded by the supplier till 10th, but they would also be able to take a credit of the invoices which they believe have been missed out by the supplier on a self-declaration basis. The first 6 months, the government is giving the liberty to claim the credit of invoices even if the same are not uploaded by the supplier by 10th of subsequent month. This is a relaxation, a much needed relaxation, but let's be cautious that it's available only for the first 6 months. Under stage 3, which is post 6 months, the input tax credit would be limited to the invoices uploaded by the supplier on a particular date, which is 10th of subsequent month. So this is the 3-phased approach which the government is likely to adopt for implementation of the new return process. So what is changing? Let's compare what we have today with what is proposed. So today there is no auto population. Although initial return formats and GSTR3 in particular was supposed to get auto-populated from GSTR1 and GSTR2, but as you all are aware, GSTR2 is in abeyance and GSTR3 is also in abeyance. Therefore, when we file a GSTR1 and 3B, which are the two returns prevalent today. There's no auto population which takes place. Under the proposed scheme, as I mentioned earlier, the monthly return, and if you look at the fields, I think 80 to 85% of the fields are getting auto populated. This is the outward supply and the inward supply in Excels. Under the current scheme of things, recipient is liable to take action on the invoices only after 11th of next month for invoices uploaded up to the end of the same month. This is the current scheme as per law, which is in abeyance. Under the proposed scheme, as I mentioned earlier, whatever invoices are uploaded by the supplier up to 10th of subsequent month would be available as a credit, except the transition phase. Third point, input tax credit is recovered with interest from recipient if the tax has not been paid by the supplier. And a lot of my clients have questioned me, Harpreet, why do we get penalized because of the fault of our suppliers? Frankly, I don't have an answer for them. Thankfully for them, for all my clients who've been asking me this question, there would not be any automatic reversal of ITC, even if the supplier has not paid the tax. But this facility also comes up with a time-bound limitation, which is 2 tax periods. So if you claim the credit of an invoice uploaded by the supplier, unfortunately the supplier has not paid the tax, you can still continue to claim the credit for 2 tax periods and request the supplier to rectify it, pay the tax. Post that period, you need to reverse that credit.
What is 2 tax periods?
Okay, so if it's April, then May and June would be the 2 tax periods. Last one, recipient can claim ITC on invoices uploaded up to the end of the same month. Yeah, so see, under the present scheme of things, let's say we're in the month of January. The law says whatever invoices are uploaded by our supplier in the entire month of January, you can claim a credit of that in the month of February. So the deadline is 30th of January. Now this becomes 10th February in case of new scheme of things. So from 30 days, the deadline to claim the credit increases to 40 days because the new deadline will be 10th of subsequent month. Moving on to the next slide. Now this one, the first one is again interesting. Presently, we do not have any facility to amend the returns. Humans are prone to errors. We make errors, advertent, inadvertent. Thankfully, there is a facility to amend the returns, and they've said you can amend the return twice for each particular month. For say again month of January, if I want to amend the return, I can amend it, and we can do it twice. The present system does not have any suspension on uploading of invoices. So I'll elaborate on this point. Suppose a supplier is defaulting in his payment of taxes. He's not paying the taxes to the government. His profile is not very good. Initially, the government had contemplated that if any supplier, if he's a habitual defaulter, we'll penalize him by not allowing him to upload the invoices automatically so that recipients do not bear the brunt of a defaulting supplier. This was contemplated in the present scheme of things. Unfortunately, it could not get implemented. Under the proposed scheme of things, this is there in the provision that if anybody defaults above a particular threshold or above a particular payment threshold or a time period, the invoice uploading facility of that particular supplier would get suspended, which means that you would clearly as a recipient know who are the suppliers who've been defaulting in the past, and you as a recipient would not like to deal with such suppliers. Third one is returns to be filed until registration cancelled. So again, this has been a long-standing demand of the industry. For any reason you decide to surrender your registration, you file application to the government. The tax authorities typically take about 4 to 6 months to cancel your registration. It's a long drawn process. But till the time the registration actually gets cancelled, you are supposed to do all the compliance and file your returns. It becomes cumbersome because you already discontinued your business, you're not doing any transaction. It's unnecessary filing of nil returns. Thankfully, under the new scheme of things, there would not be any requirement to file returns if you applied for registration cancellation. The moment you apply, your return filing goes into abeyance. Presently, the return formats are fairly detailed. Details like purchases or supplies to B2C customers above 2,50,000, less than 2,50,000, for reverse charge mechanism, invoice-wise reporting. All of these would not be there in the new proposed format. Some other salient features, unlocking. again, government realized that even if we give time to the recipients to lock the invoice, still it may so happen that you've locked the invoice basis a representation from a supplier, but then later you realize there was some inadvertent mistake. So there is a facility of unlocking the invoice by the recipient, subject to he not claiming the credit of the invoice. If not claim the credit, even a locked invoice can be unlocked, but if this facility is available only to the recipient. So that locking and unlocking can be done only by the recipient. Supplier cannot do this. Amendment return, I spoke about this. Two amendment returns can be filed, and the deadline is earlier of return of September or annual return. Input tax credit facility to claim ITC on self-declaration basis in new return up to 6 months after implementation. So this is the transitional provision which I spoke about. So once the transition period is over, you will be able to claim the credit only of invoices uploaded by 10. But for the transition period of 6 months, you can claim credit on a self-declaration basis also. But this is only for the first 6 months of the transition. Amendment of invoices can be done, but two conditions. One is that ITC input tax credit should not have been claimed. So you can amend the invoice as a supplier, provided your recipient has not claimed the credit of it, A, and B, the recipient has not locked the invoice. So once it is locked, then it's only the recipient who can change it. But if it has not been locked, you as a supplier can change that invoice. Then profile-based view. So this is interesting. So what would happen is, the moment this new return scheme comes into play, there would be a questionnaire which you as a dealer need to file. And this questionnaire would ask you whether you do exports, whether you supply to SEZ, whether you import goods. And depending on the answers which you give, your profile in the system would be locked, and fields which the government believes are irrelevant for you would not be required to be filled by you. So, while the return, for example, has 50 fields, but if you in your profiling mention that first 20 fields are not relevant to me because I'm a small trader, and you don't foresee them being relevant, those 20 fields would get automatically locked for you, and you will be required to fill only the balance 30 fields. Does it mean that you can't change it? Of course, your profile can be changed, as in when you enter into new transactions, the profile can be changed. The reporting of reverse charge mechanism supplies. Most of the industry players are worried about this provision, which says that if you are a registered dealer and you're buying goods from unregistered dealers, or you're buying certain goods which are liable to reverse charge, it is you who is required to pay the tax and do the compliance. Under the current scheme of things, reverse charge transactions are to be reported at an invoice-wise level, which means whenever you buy anything, you need to report it invoice-wise. So I'm at E.T. Rice's office today, and I can see it's a huge office, 500 employees. I'm sure the admin of this office, they buy multiple things on a daily basis. Let's say, toiletries for being used in the toilets, eatables, etc. Since they are being bought from unregistered dealers, the onus of compliance would fall upon ET, and in which case, under the current scheme of things, they are required to report each and every transaction invoice-wise. Thankfully, this provision is under abeyance right now, but if that provision were to be implemented today, it would be huge compliance on ET to mention the detail of each invoice and pay tax on that. So they'll have to figure out the rate of tax on a Dettol soap or a toiletry and pay tax. Under the new scheme of things, while you are required to pay the tax, but the reporting would be only GST wise, which is registration wise or in a consolidated manner. So what are the key advantages of the new scheme of things? So it's as I said, the first point on the left hand side, it is a unidirectional flow of invoices and debit notes. It's only uploading by the supplier. The recipient only needs to either approve it or reject it or keep it into abeyance. Second is, now this is adoption of tax technology. The second point says filing of nil returns facilitated through SMS. I'm on the left hand side of the screen. So what they've said is, if there are nil output supplies, there are nil input supplies, and there is nil input tax credit. Three conditions. If there's no output supply, no input supply, nil credit, you need not file a return. You only SMS to the government, and that would be construed as filing of your return. So a very forward-looking, advanced-looking provision, which is filing of returns through SMS in case of nil transactions. Third point is that if inadvertently an invoice was missed, invoice pertaining to a previous period, again, I'm in the month of January, let's say there was an invoice pertaining to the month of November of the previous year, it was missed and the liability needs to be paid. So the return would have the facility to report all the invoices pertaining to not only the current period, but also the previous periods and pay a consolidated amount towards the tax liability while reporting to which period each invoice pertains. The fourth point on the left-hand side is on offline IT tool. This would really be helpful for small dealers. People may not have internet connectivity throughout, 24/7, and they may have number of invoices being issued on a daily basis. What they can do is they can use this offline utility, upload the invoices every day on this offline utility, and whenever they have good connectivity, say after 4 days or 5 days, they connect once and the entire bunch or the entire batch of invoices gets uploaded. The first part on the right hand side, precondition of receipt of goods. So today the law says in order to claim the credit, you should have received the goods or services. In terms of the new scheme of things, you need not receive the goods or services for claiming the credit. Now, this is a tricky one because the law says something different and the new return says something different. So perhaps the law may need to be amended. But what the new return format suggests is that the precondition of receiving the goods before claiming the credit may not be required. So you can claim the credit even if the goods are in transit. The next one is for exporters. The return would have a table where you can plug in the details of shipping bills. So you've exported the goods, you have a facility to upload the details of shipping bills. And once you've uploaded the shipping bills, this detail would automatically get transmitted to IceGate. IceGate is the customs IT system. So, through this process, it is expected that your refunds could be expedited. So there would be a linkage between your GST return and the IceGate. Shipping bill details which have been uploaded to the return automatically get transmitted to the IceGate. And because of this, the refunds can be expected in an expedited manner. Recipient to report missing invoices. So, the recipient, if the supplier has not uploaded any invoices in time, there's a facility given to the recipient to report them and also follow up with the supplier so that, there's no automatic reversal. Payment allowed through amendment return to save interest liability. Yeah, so again, since we have the facility of filing 2 amendment returns, payments can be made through these amendment returns, and this would save the interest liability. Interest would not be payable. So I've spoken a lot of good things about the return. What are some of the challenges which I foresee in the new scheme of things? So HSN reporting would still continue, and I'm aware that a lot of my clients, a lot of dealers in the industry are facing this challenge, especially those who are not buying goods from manufacturers directly. Because if you're buying from a manufacturer were under the erstwhile regime also in the habit of mentioning the HSN code, the 4-digit code, but traders are not used to mentioning the HSN code. So this requirement still remains. So for goods, you need to mention the HSN code up to 4 digits, and for services, you need to mention it up to 6 digits. So this reporting continues, and this may pose a challenge. Second one is relaxation in condition for receipt of goods and services. I covered this point a little while ago. So the new return scheme says that you can claim the credit in spite of not receiving the goods or services. But unfortunately, this condition is there in the law. So a rule or a return cannot, go beyond what the law says. So perhaps because of this provision, the law would need to be amended. Otherwise, this provision may not become functional. Third one is on capital goods. So on capital goods, the law says that you can claim the credit of capital goods only if it has been capitalized in the books of account. So this is a problem which we are facing today, and I foresee this problem to continue. Generally, it is not known, as to which assets have been capitalized, and therefore it is a challenge to see. The tax team needs to interact with the accounts team and finance department to see what are the assets which are being capitalized so that we can claim a credit of input tax in the GST returns. So that reconciliation would still continue under the new scheme of things. The first point on the right hand side, higher late fees. While the government has given the facility of filing the amendment return, but they say that in the amendment return, if you report a liability which is more than 10% of what you had reported earlier, there would be a late fee, and this late fee would be higher than what you have today. The next one is also important. This is on deemed locking. So it says that if, as I said earlier, there are three options available to every recipient. Every buyer has three options: A, either accept it; B, either reject it; and C, keep it pending. Now, in case the recipient neither rejects it nor mentions that in the pending invoice table, then it's deemed to be locked. So one needs to take a call on each and every invoice one has received. Otherwise, it's a deemed locking. Invoice would get automatically locked. I don't foresee any relaxation in that in the current scheme of things, in the proposed scheme of things. But hopefully, the government may come up with a provision which takes care of this deemed locking. Last one, of course, is technology infrastructure. Most of the software companies already face a lot of challenges in developing APIs, softwares for the current return, which is GSTR 3B and 1. With the new return coming into play, this would mean that there's additional expenditure. People would have to reconfigure their ERP systems or go for software which are capable to take care of the new returns. So this was pretty much from my side. Pran, over to you.
Right, great. Thank you. Quite a lot of questions. So let me go to the first one. It is from Shavukta Merchant. She's asking the overall impact on real estate industry.
Right. So in the new scheme of returns, there's nothing specific for real estate sector. So the simplification which I spoke about or the challenges which I spoke about would equally apply to all sectors, including real estate. But there's no specific provision per se in the return format for the real estate sector. So you are in the same boat as all others in other sectors.
Right. Second point, right, same. I think we actually covered it. But what are the changes in the new return format?
Yeah, so I just summarize, yeah. So from two returns, we are moving to one return, as I mentioned. B, today we have multiple tables. There will be only two primary tables, the supply table and the inward table. Most of the table is auto-populated. And then, we have SMS facility for filing nil returns. So these are some of the key changes which are, in the new scheme of things.
Right. Harul Anam writes saying, who will fill and the obligation of filing?
So the obligation of the filing is always on the supplier, in the sense that not on the supplier, so each registered dealer, anybody who crosses the threshold and who's registered is liable to fill the return. So if I've crossed 5 crore of turnover, I become a large taxpayer and I file my monthly return. And if I'm a small taxpayer, I can either opt for the quarterly return or the Sahaj or the Sugam forms, which I spoke about.
I think more of same. Vijaya Chandran says, I want to know the changed return filing process.
So it's same, it's one return, online filing, apart from the SMS facility for the new return, there's nothing drastic which changes. We'll still use the same portal, GSTN portal. The online filing process remains the same.
Ramesh Trivedi writes in saying, mismatch correction between GSTR 1 and GSTR 3B.
I think this question is more on the current scheme of things, not on the proposed format, but still I answer this. So any mismatch between GSTR 1 and 3B, which we have today, can be rectified in the GST annual return, for which the deadline is 31st December. So all mismatches which you have today can be reported and rectified in your annual return to be filed by 31st December 2018.
Okay. So the next question is coming from Ashwarya Sharma. Says, is it mandatory to report Schedule 3 items / activities such as monthly salary payable by taxpayer in the new format?
So in the new format, there is a table, which is, I think, part D of table 3, which is called a no supply table. So all your Schedule 3 supplies need to be reported in that particular section, which is Part D of Table 3. And also, the good part is that these supplies need to be reported on a GSTN level. So invoice-wise transaction is not to be reported, but all your no supply items such as high C sale, sale from bonded warehouse, employer-employee transaction, sale of petroleum products, which until they are brought under the GST ambit, all of these are required to be reported under Part D of Table 3, which is on under the heading no supply.
Right. So next question is from Abhishek Kumar. Says if new returns are implemented by April 2019, and I have filed my GSTR and GSTR 3B, maybe even GSTR 1, I'm not very sure, and GSTR 3B of March 2019. When can I amend this data up to March 2019 in the new return forms?
No, so the question doesn't seem to be very clear, but if I've understood correctly, given that the new return process would provide an option to file amendment returns, so whatever you filed till now, that cannot be amended. And whatever you will file post, once the new return format comes into play, as I said, there's option to file 2 amendment returns for each tax period, and you can avail that option.
Right. So Neeraj Agarwal says, currently I'm filing monthly return. Is there a provision in which I can file return quarterly or biannually? I am not enrolled under the composition scheme.
As I covered in my presentation, under the new return scheme, anybody who has a turnover less than 5 crore can opt for a quarterly return. So you can opt if your turnover is less than 5 crores in the preceding financial year. And also, even if you opt for a quarterly return, the tax needs to be paid on a monthly basis. What is important is if all your suppliers, all your customers are people who are doing their compliance on a monthly basis, they might request you to also do the compliance on a monthly basis because they want to claim their credits on a monthly basis. So while you would very well have the option of filing a quarterly return, but given the profile of your customers, you may be compelled to do a monthly filing. But in terms of the law, in terms of the new scheme of things, you would get an option to go for a quarterly return.
Okay. Sandil Kumar M says how to reconcile last 1 year GSTR 1 and GSTR.
I think this question got repeated. It's the same answer as I gave previously. Any reconciliation issues for GSTR 1 and 3B can be done while filing the GST annual return, for which the deadline is 31st December 2018.
Okay, so the next question does not have a name to it, but it says, would filing of quarterly returns work for small taxpayers, especially if they are dealing with taxpayers who file monthly returns?
This is exactly the comment which I was making earlier. So as I said, the option to file a quarterly return is very much given for people who have turnover less than 5 crores. But in case your customers are filing the returns on a monthly basis, they may request you to also do your filing on a monthly basis so that everything reconciles. And any which ways, please understand that even for those who opt for a quarterly return, the payment of tax needs to be done on a monthly basis. So it's just a filing which increases. While you have an option, but I really foresee if you are selling to business, then your customers may request you to do the monthly filing. But if you are in a sector which is business to consumer, you're selling only to people who are not registered, then you may continue to file on a quarterly basis.
Right. Next question comes in from Raj Kapoor. He says, assuming this gets implemented in 2019, what do we do with the returns of the year gone by?
So we need to file the returns till the new returns do not come into the picture as it is, and there's nothing to be done. These returns once filed will be locked with the government. They would do the assessment of this year basis the old returns filed, and once you start filing the new returns, nothing needs to be done for the old returns. They need not be revised. Nothing needs to be done. Once
I think I get this question quite a lot as well. There's confusion that do you need to fill in the returns for the entire year under the new scheme again?
Okay, absolutely not. So whatever filing we've done will not be asked by the government to revise that filing or do any additional compliance. So there would be a month till the time government says you're liable to file GSTR 1 and 3B, and from the next month you will be liable to file the new return format. No revision of past returns that have already been filed.
Right. Writes, what are the provisions in the new form with regard to purchases made from unregistered dealer?
So we have a provision. It says that all reverse charge mechanism. So purchase from unregistered dealer is liable to reverse charge. Thankfully, it is in abeyance still, as of now. But as and when it comes into the picture, the new return format says that it needs to be reported, but thankfully on a consolidated basis. So it needs to be reported on a dealer basis. So you buying goods from say Ram and Company, that's your unregistered dealer. You need not report it invoice-wise. Whatever is the total of purchases you made from Ram and Company, you report it in a consolidated manner.
I think we're just talking about it. But Rajat Gupta is saying, what is the update on reverse charge? And are we likely to see any tweaks compared to what was laid out previously? And what treatment, if any, has been given in the new forms?
So, the treatment remains the same. So the new return format also says that reverse charge mechanism needs to be reported. It needs to be reported by the recipient, who's liable to pay the tax. A, B, it needs to be reported on a consolidated basis. It need not be reported on an invoice-wise basis, which is the biggest concern of everyone. So the good news is that reverse charge would be reported only on a consolidated basis vis-a-vis invoice-wise reporting.
Okay, so next question, we briefly touched on it, but Nitin is asking, how will our profile be created for the new forms? And can we make changes to this profile?
Yeah, so as I said, the new scheme of things says that any dealer who's transitioning from the old return scheme to the new return scheme would be given a particular set of questions, which are primarily to determine what profile are you in. These questions are around, whether you do exports, whether you import services, whether you import goods, whether you provide services or you're only a trader. And once you provide the answers, the system automatically would fix your profile. This is what transactions you enter into. Good part is the fields which you don't require. For example, if you're a trader, if you have a shop say in Noida and you only into trading, you have a retail shop, it's a mom and pop shop, you're selling groceries or whatever. So you per se would not be exporting anything because it's B2C. You would not be providing any services to SEZ. So those fields are redundant for you. You need not fill a nil every time. Depending upon what profile, what answers you give to the profile questionnaire, your profile would be fixed and only the relevant fields would be active. Now to answer your second part of the question, once your profile is set, you keep on filing the returns versus your profile which is set. In case you enter into new transactions, there would be a provision for you to amend your profile and then the new fields would be activated for you.
Ritesh says, what are the noticeable changes for exporters? Can we hope this will speed up refunds? I think that's been a big headache for exporters.
Absolutely, Bran. So what the new return says is, it has a table for entering the shipping bill details. And the note which was released on the new return format says that you will be allowed to punch in the details of your shipping bills before you file your return and even after you file the return. So you can file the details of your shipping bills even if you file the return, you did not report a particular shipping bill, and then you report it on a later date. It will not be treated as late filing. That's point number one. So all shipping bill details are to be populated in the GST return. Point number two, it says that your GST return would be in link or in sync with the IceGate, which is the customs portal. So they would be talking to each other. Whatever you reported in the GST return gets transmitted to the IceGate portal. And this is all of this, your refund would be determined. And although the document doesn't say, but I'm presuming that once this happens and it works in a seamless manner, of course, the refunds are likely to get expedited.
Uh, Chandan Rao is saying any impact on the annual returns you will file this year, also any impact on GST audit that you need to do.
No, as far as this year is concerned, I think you're talking about the year ended 31st March 2018. The annual return and audit would need to be filed by 31st of December 2018. Unfortunately, Chandan, both of us know that the audit form is not yet out, and we are all waiting for that format to come. So there was a form, I think 9C, but unfortunately, it was a fairly long form, and the government is relooking at it to, slightly shorten it. So the current annual return and audit for the year ending FY18 would continue as it is, and you need to do the filing before the deadline.
Right. We completely out of time. Last question that I will take, and this I think is a new concern, is that limit says the new forms talk about unidirectional flow of document. If the supplier fails to upload the details of invoices before the 10th of next month, then the recipient will be ineligible for ITC. This seems to be problematic since there is no provisional mechanism to avail ITC, and you seem to be merely at the mercy of buyers.
Answer is yes and no. No, to the extent that for the first 6 months, the government has given the leeway of allowing us to claim the credit, even of invoices not uploaded by the supplier up to 10th. We have that facility. We can claim the credit, but this facility is available on a self-declaration basis only for the first 6 months of transition. But your understanding is correct. Post those 6 months, we would be left at the mercy of our suppliers. So we need to choose our suppliers right. There would be a profiling. Government has spoken about blocking the suppliers who are regular defaulters. But yes, seems to be a little harsh. But what the government is encouraging is everyone to choose their suppliers correctly, encourage compliance within the industry. So they want everybody to deal with only people who are GST compliant. Yeah.
Great. Thank you so much, Singh. And I'm sorry, there were a lot of questions which remain unanswered. We'll try to get them resolved, and probably we'll do more of such sections. And thank you, Mr. Singh, once again.
Thank you, Pran. Pleasure is all mine. Thank you.